If you're looking for market data, you might not even know to call it market data. It could be your first problem. But market data usually is the industry term in finance and fintech for stock prices. And usually you get lumped ETF prices. Mutual funds have net asset values. Those get treated a little bit differently. But and recently crypto can get lumped into this broad catch-all as well. But traditionally, when most people say they're looking for market data, what they mean are the underlying prices for securities like ETFs and stocks. And Intrinio provides a lot of that data. You can get that from us. But if you're just starting out on that journey of, for some reason you need market data, you are you kind of have two choices. You can hook up with a provider like us, and we do a lot of the work for you. Um, or you can just go and try and do it yourself, and get the data directly from the exchanges where that data is created. So I'm going to walk you through just a few of the basic principles if you want to do it either way. If you want to get it from us or if you want to get it from a different provider, like how does this data even end up in your Robinhood trading app or on Yahoo Finance or um, on a billboard in Times Square showing levels of like the Dow Jones industrial average. So if you wanted to go get, let's just start with real-time stock prices. Immediately, your first problem is going to be, what do you mean by real-time stock prices? There is this um, concept that the SEC mandates of the consolidated tape, which pulls in stock prices from all the different exchanges across the United States and combines them. And every time a stock trades on one of those exchanges, it's consolidated and displayed to you through this consolidated tape. And there will be lots of asks and bids, which are terms that you should know if you're buying financial data. And those are the ask prices are what someone who owns that stock is asking to sell it for. The bids are what someone who wants to buy that stock is bidding to buy it. There's a lot of nuance about how stock asks and bids make it onto a specific change. One of the more recent nuances of that topic has been something called payment for order flow. And so what ends up happening is folks will pay to get orders placed on their exchange. And this is where a lot of the profits for companies like Robinhood come from. And they're getting paid to send the trades that individuals are making to specific locations where they then fill and match those orders. But without diving too deep into the weeds of payment for order flow, let's just say that you're trying to display this, real-time stock prices on your website for your users to increase engagement, and they can come and they can see, oh, I'm doing research on this platform and I want to know what the level or the last sale prices are for the stock I'm researching. Is it up today? Is it down? That's really helpful information for anybody who's thinking about doing a trade, which is what most retail traders, even professional traders, they're watching the stock price because the value of that stock is relative to what it's trading at. So if you're finding it's undervalued or overvalued, you need to know what level that stock is trading at currently. So you might want to display this on your website. So the first thing you have to decide is, do you have to have that consolidated tape, which is the gold standard for stock prices. It's consolidating across all the different exchanges, Nasdaq, NYSE, IEX, MEMX, on and on. There's NYSE National, all these different exchanges in the United States, dozens, maybe more than a dozen. And if you get the consolidated tape, what you're getting is called the National Best Bid, Best Offer. In the industry, you'll hear it referred to as the NBBO, and that stands for across all these exchanges in the nation, what's the best bid, meaning the highest price someone's willing to pay for the stock, and the best offer, meaning the lowest price someone's willing to sell that stock for. And then combined with that, you'll want the last sale, meaning the most recent transaction that actually went through at a certain price, because that is what the SEC and all these different exchanges consider to be the stock price, is actually that last sale, the most recent one, because if it's trading at that price somewhere, that's what the is considered to be the stock price. if you're actually executing trades in your platform like you're a brokerage, you have to have the MBBO. You have to show that to your users, because that's the only way the SEC can guarantee that, consumers at least know that they're executing in the ballpark of that MBBO. Because I think that, I actually don't know why they did that at some point, but presumably you could say, you could execute trades far off from the MBBO, and the folks that you're executing trades for on your platform would never know. But the problem with the MBBO is it's very expensive. There's only a few providers of it that consolidate all those exchanges. It's NYSE and Nasdaq do that. And because the SEC's kind of had it limited for a long time, those firms charge large fees to get that access to that data. And a lot of that's mandated by the SEC. What it amounts to is that using the MBBO on your platform is extremely expensive, talking six figures or higher, usually, depending on your platform, things like that. And this is where you'll first run into exchange fees and per user fees, and then the different vendor fees that go into it as well. So if you're getting data from an exchange, they'll have exchange fees, and getting the consolidated tape has exchange fees as well. And then you'll also have per user fees, meaning every time you show that data to a user, you have to track that, and you might pay a small fee, or you might pay a monthly fee for that user. And that can get very expensive very quickly, especially if you have a lot of users. And then you also have connectivity fees. So whoever's providing you with that data, they'll charge you to set up a server and connect you and all these other things. So you have 3 different levels of fees just to connect to that data source, to pay for your users, and to pay the exchange fees. And it gets extremely expensive. So if you don't need the MBBO, generally speaking, you shouldn't use it. And that means you'll get a little less quality, but it's going to be dramatically more affordable. So instead of the MBBO, what are your options? The biggest 3 players in the industry are Nasdaq. They have a product called Nasdaq Basic. And then CBOE1 has another about the same quality of data feed for real-time stock prices as Nasdaq, and then NYSE as well. Together, those 3 make up about 60% of all trades going through those 3 exchanges. And they're generally, all 3 of them are considered to be very high quality. So you're getting when you're buying that data, what you want to look at is how close are the trades on that exchange to the MBBO that you'd see in the consolidated tape. And you'll see things advertised like 99.5% of the time trades on that exchange are within 1% of the MBBO, something like that. And that'll tell you, there is not a lot of drift between what trades are happening on this exchange and what's happening across all the exchanges. The more volume that an exchange has, the less drift you'll get from the MBBO. So you can go out and you can get pricing from all these different exchanges, and it is going to be cheaper than the consolidated tape. Otherwise, everyone would just use the consolidated tape. Depending on your needs and your preferences, it might be good enough for your users. They're not really going to notice a 0.5% difference in volume if they're just looking with their eyes at what a stock price is. You can't really tell the difference between the MBBO and what's trading on most of the big exchanges, because there's so much volume moving through all those exchanges that they all tend to converge and become very close to each other because of this effect that people who are selling their stocks, if they're not going to sell it on an exchange at a very different price from what they could on another exchange, because the buyers will move and so will sellers. So if you're going to execute at a lower price, you just pick a different exchange, and the buyers are doing the same thing. So all these different exchanges tend to kind of converge onto that MBBO. They do drift. There are moments throughout the day where trades happen at different levels than what within a small amount of the MBBO. That's very normal. But generally, the bigger the exchange, the less you'll see that. You don't want to get it from the UTP, for example, for right now, because it's too expensive and you're not doing trade execution. So you go look at these other exchanges. You're still going to have a exchange fee, and those are generally regulated somewhat, but they're pretty high, thousands of dollars a month. You're also going to have connectivity fees at most of these providers for setting up a server and connecting you, or even if you go through a third-party vendor, you'll have those connectivity and third-party connection fees. And you'll also have per user fees at all of those big exchanges. So every single user that you have to track. And that tracking piece becomes very, not just expensive, but also time consuming for your team, because you're going to have to build a system on your end that users either log in or you have some way of tracking them so that you can report back to those exchanges every month. And now you have an administrative task to do and then a bill to pay that varies every month instead of just a flat fee. To get the data, you're paying for all those users, and that can become very problematic as well. So if you have a platform with a paywall that you can track how many people behind it, it might make sense to get that high quality data, but most of your users aren't going to know the difference between like the stock price on one of the bigger exchanges and a smaller exchange for large cap stocks that are traded quite a bit. So every minute, for example, tons of shares of Apple are being traded, tons of shares of Tesla, because lots of retail traders are interested in that, lots of institutions are interested in that. But if there's like a small micro cap or small cap stock that nobody even really knows about, isn't trading, that you're going to see a bigger problem with the latency between the NBBO, that drift, and that small cap stock than you will for a large cap stock. So you don't want to pay for a service you don't really need if there's no demand for it from your users. So your next choice is to go to a smaller exchange, and there are exchanges that are very very affordable, just a few $100s a month or less than that even, that are out there. And they are the exchanges like IEX and the Members Exchange, and specific smaller exchanges like Chicago, Nasdaq Chicago, and IC National. They do a very small amount of volume, less than 1% in many cases, or 1% to 2% in others, of all the trades are happening on some of these smaller exchanges. Because remember, Nasdaq, NYSE, and CBOE1 are picking up almost 60% of the market for all that trades. So you can go to one of these smaller exchanges, and depending on the exchange, you might not have per user fees, and you might not even have exchange fees. Maybe you have connectivity fees, maybe not, but navigating all those smaller exchanges takes a lot of experience, and knowing which ones have which fees can be kind of hard to figure out on your own. But in general, those smaller exchanges are going to have orders of magnitude fewer fees and lower costs than some of the bigger exchanges. And what you save there, you get what you pay for. You're saving money and a lot of overhead and pain of tracking and counting all those users, but you're going to get a lot less volume, and your end users that you're displaying those stock prices to, they might notice. It might be a small stock, and they say, this is way off from what I'm seeing on other exchanges or on other websites when I go there. And that might happen, might not. Depends on how you're displaying the data and who you're displaying it to. So if you want to, you could start with a small exchange, get up and running, do your user testing, show that to users, save a lot of money. When they start noticing you start getting a bigger budget, you can upgrade to some of those other exchanges and upgrade to the UTP and CTA, which are other words for the consolidated tape as well. So what I like to do at Intrinio is we talk about this journey you can go upgrading. You don't want to pay for more than you need, and so you should start with some of the smaller exchanges on your platform. And the reason why people don't do that, start with the smaller ones, move to the bigger ones, and end up with a very high quality, low latency, a lot of volume exchanges. The reason why people don't do that is because transitioning your platform from one data provider or one stock exchange to another can be really tough. There's a lot of paperwork to submit. You don't want to get on the wrong side of regulators, the SEC or the exchange. So you want to make sure you're doing everything properly. And that's what Intrinio can help you with. We can make sure that you're getting set up at a low cost, the lowest possible cost for what you're trying to do, and then help you navigate that as you grow to some of these bigger exchanges. So just picking the exchange is only half the battle. You have 4 or 5 other problems to deal with as well, which is how are you going to connect to that exchange? You can set up a server. You could go there yourself to the data center. Usually they're in New York, or depending where the exchange is located, you might have a different data center in other parts of the country, but you can physically set up a server and take a plug and plug it into the exchange. The exchange's server, and then plug it into yours, and then plug your server in. I'm sure that oversimplifies the technical problems dramatically, but there are a lot of companies that do that. They pay to have a server there that is expensive, and then they, in addition to paying for that server, they pay someone to go maintain it and make sure that it's up and running at all times. That is a nightmare for most companies. If you're just trying to set up a website and set up a platform or build out a tool for your users, you don't want to be hiring people in New York that have to go physically set up servers. So you can work with a third-party vendor that has already done that. Like Intrinio has that infrastructure set up for you. And then you can either connect, if you're not connecting directly, you connect over API. And so what we see most of our customers doing is going with either a REST API or a WebSocket API. And those are, one is less latent and streaming, pushing updates to you. The other, you're requesting updates, and usually you'd go with the REST API if you don't need to update what your users are looking at as often. WebSocket, if you're caring more about showing more frequent updates to your users. Slightly different costs just in terms of server costs there, but usually you can work with a third party like Intrinio to get that server set up for you. And then your last step after you have that server set up is you're going to have to submit some paperwork. If you're getting real-time options prices, you have to submit paperwork to that exchange, Oprah usually. If you're getting data from IEX or MEMX or Nasdaq, whatever exchange it is, they all have slightly different paperwork to submit, and different departments you need to contact. And navigating that infrastructure, getting the right paperwork and boxes checked so that your access can be approved, is in itself a huge challenge, and that's something else that Intrinio can take care of for you. So if you're worried about that, or you don't have experience with do I need to report users for this exchange? How often do I need to report them? How do I pay for this? And what kind of API should I use? Usually you end up working with a partner that can help make that simpler for you, unless your business is truly setting up and connecting low latency real time fees and you're a high frequency trader, in which case you probably knew everything we've been talking about so far and you don't need us. Go do it yourself. So that's just a little bit of the complexities of the real-time market data world. And if you're interested in learning more about that, just contact us. We deal with this every day. We've done it for thousands of customers, and that experience can make your life a lot easier. You don't have to be worrying in the middle of the night if your server over at NY5 is going to go down, and you'll have to run over there in your bathrobe and slippers and plug it back in and, put more gas in it. We can take care of that for you. And you don't get that knock on your door from the regulators or a letter from the exchanges saying, hey, you're doing something with our data that you're not licensed for. You can focus on your business and displaying that data to your users and growing your own company.